On October 29th, the Federal Reserve delivered a quarter-point interest rate cut, but it also handed corporate finance leaders a masterclass in what happens when institutional dysfunction collides with monetary policy. Chairman Powell's admission that the central bank is driving in the fog thanks to the government shutdown isn't just colorful rhetoric. It's a warning shot that should recalibrate every treasury operation and capital allocation decision that you make right now as CFO. Here's what matters. Powell acknowledged strongly differing views within the Fed about December's potential rate cut, with a growing chorus now feeling like maybe this is where we should at least wait a cycle. Those are very interesting words. The translation is the quarter point cut they just delivered may be the last certainty we'll get for months. December's meeting carries only a 2-to-1 odds for another reduction, so corporate leaders would do well to plan accordingly. The bifurcated consumer story should sound familiar to anyone reviewing their receivables aging reports. Powell noted consumers are stressed at the low end of the income distribution, but those at the upper end are spending robustly. If your revenue model assumes uniform consumer behavior, you're building on quicksand. This isn't a recession signal, it's a segmentation imperative. More troubling is the policy paralysis created by missing data. The Fed is scraping together private surveys and anecdotal evidence, while official employment and inflation reports sit unpublished. Powell confessed that this could affect the December meeting. When the institution charged with economic stability admits that it's flying blind, your scenario planning better include extended uncertainty. The historical context is damning. Only the third time since 1990 that Fed policymakers dissented in opposite directions. One governor wanted deeper cuts, another wanted none. That's not healthy debate. That's institutional confusion about basic economic trajectory. For CFOs, the playbook is straightforward. Extend your cash cushions, stress test your covenants against a wide range of rate scenarios, and stop assuming the Fed has this figured out. Apparently, it doesn't. Powell promised they'll collect every scrap of data we can find, quote unquote, which is precisely what you should be doing with your own business intelligence. Because when the central bank is navigating by feel, precision becomes your competitive advantage. If you'd like to know more, visit us at cfointel.com, realstrat.com, or contact me at andrew.zezas@realstrat.com. This is Andrew Zezas, to the point.